In this video, we're going to talk about how to have a tax lien withdrawn. This video starts now.
If you want to stop any problem with the IRS, we'll show you our best insider tips, how-to guides, and little-known secrets to get there fast. Before we jump in, go ahead and click that subscribe button so you never miss another video to protect yourself and your bank account from the IRS. Let's go.
Hi, I'm Anton. This is Real Talk with Tax Law Offices. Thank you for joining me on this video. Before we get started, please, we'd love to have you subscribe to our channel. While you're at it, hit the like button and make sure you hit the bell icon so you never miss another video for what you need. Okay, let's get started. So, what is a federal tax lien? For anyone that owes money to either the federal government or a state tax authority, the tax lien is a tool, it's an instrument used by that tax authority, again from the IRS or the state, to secure its ability to be able to collect that tax. And actually that tax lien is pretty sweeping in its authority, because what it does is it actually attaches to all the assets of that person that owes tax. I think the language read something like, it attaches to all assets of the taxpayer now owned and future acquired, meaning basically everything that you have and everything that you're going to have until the tax is paid or otherwise satisfied or otherwise becomes unenforceable. Kind of a big deal. Again, when the tax lien is issued, the federal government will actually file that lien in your county, your last known county, wherever you lived when you filed your last tax return. The government will file the lien with the county recorder. So basically it gets recorded against your real estate and any other assets that you have recorded. Now, in some years before, that tax lien would actually also get filed with the credit bureaus, and that would significantly affect that taxpayer's credit score, their ability to apply for and receive new credit. So even though the lien does not get filed with the credit bureaus, they still get picked up by the credit bureaus, again, because of the digital exchange and the fact that they're just picking up that information from the county recorders. That tax lien can also seriously affect your rights in property, particularly in real estate. The lien actually represents some additional amount of debt that is tied to, in this case, let's just talk about real estate, that's tied to the real estate. And it can prevent someone from selling their real estate, from refinancing, from possibly even passing it on to another family member or someone else. And there's some technical rules behind that. We'll get into that in another video. It could even affect someone's ability to discharge their taxes in bankruptcy if there's a lien tied to real estate that they plan to retain after bankruptcy. We did a bit on a video, and you can always check that video out. But right now, for this video, we're going to talk about the best way to get rid of a lien, which is the withdrawal of a lien. There are a number of ways to remove a lien that's tied to property. There's a nice little trick that it can be subordinated, in particular when you want to refinance property, or you can even have a non-attachment of a lien to a particular piece of property. And that's always nice. But for this video, we're going to talk about the best way to remove a lien or have a lien removed, and that's called just the withdrawal of the lien. Again, I mentioned all those awful things that happen when a lien is filed. It gets filed with the county recorder. The credit bureaus pick it up. It becomes a public document, and anyone can see it. Sometimes it's published in newspapers. I mean, even your local school district might see that lien. But a withdrawal of the lien is really the best way for it to be removed, because when a lien is withdrawn, it's basically treated like it never happened. It's just erased, it's removed, records of it are removed. And that is the best case scenario. So you still need to know, how do you get started? What's the first step that you have to take in removing a tax lien and asking for or applying for a lien to be withdrawn? You do that by completing an IRS form, for IRS federal tax liens, an IRS Form 12277 application for withdrawal of tax lien. So the form is actually fairly simple at a first glance. I just want to touch on the different sections. That first section, questions 1 through 8, really they're just taking your personal information, name, address, phone, social security number. When you get to the section 9, it's actually very helpful to have a copy of the federal tax lien in front of you. If you have it, sometimes that information is not always available, but it's always very helpful if you have a copy of that lien available so that you can provide that information. Okay, with question 10, it's also very helpful if you have a copy of the lien. It asks about the current status of the lien. Now, in a lot of cases, you won't know what the status of the lien is, and in fact, in many cases, you won't even know that there is a lien until you're attempting to make a transaction with the related real estate. And so you see here in section 10, question 10, it asks, is it open, released, or unknown? If you don't know, then the answer is always just unknown. If it was released, seems like we wouldn't be here, right? But no, sometimes we just don't know. So in most cases, most people will just say that or check the box for either open or unknown. But now when we get to questions 11 and 12, that's actually when it becomes really, really technical. And I want to focus just a couple of minutes on those sections. Okay, for question 11. Now remember what I said. Withdrawal of the lien means that basically it's treated like it just goes away, like it never happened. But for that to be the outcome, there has to be a really compelling reason for the government to withdraw that lien. Usually it's because the government did something wrong, or there's such a big public policy reason that it only makes sense for them to just withdraw the lien. So the procedures that govern the filing of a lien as well as the withdrawal are very well documented within either the state government's internal statutes, or in the case of the IRS, in their Internal Revenue Manual. The Internal Revenue Manual, or the IRM, actually states the specific criteria of when the IRS can actually issue a federal tax lien. Remember that the purpose of the tax lien is to help facilitate, to secure an interest in the government's ability to collect the tax, but also in some cases to help facilitate the collection of tax. So another reason why it could be withdrawn is if there was already an installment agreement in place and the installment agreement did not have some provision for there to be a tax lien being filed. Now, don't forget, I also mentioned that there are some public policy reasons why a lien is also withdrawn. So then, again, as I said before, if withdrawal helps facilitate the collection of tax, and that can mean a lot of different things. I mean, there's any number of scenarios that would actually fit under, way too many to try to describe here in this video. And then the last of those reasons in that section 11 is where a withdrawal of the lien is in the best interest of the taxpayer or the government. Now, you'll find those type of situations where the taxpayer, the property owner, the person in tax debt may have some significant hardship. I mean, usually it's a financial hardship, but that may be tied to other things. For example, some medical hardship where they may need to dispose of the property in order to have enough liquid capital to be able to pay for medical treatment. Real life situations. And in that case, it's obviously in the best interest of the taxpayer, but it's also not in the best interest of the government to keep the lien, because the government really just doesn't want a lot of bad press for having kept a tax lien on someone who's in stage 4 cancer and needs the equity out of the property to be able to pay for treatment. That's a bad look for the government, and that's why that rule is there. Now, on that form 12277, there is a last section It's question 12, and that question 12 says, explain the reasons why. And it's actually not as simple as it looks. And there has to be a very compelling reason. It has to be well documented, well organized. And it's, like I said, it's not as easy as it looks. So I want to give you that warning. If you want to try it yourself, feel free. It's supposedly this form was designed to be able to do yourself for a taxpayer to be able to do on their own. Burden of proof and of creating a very compelling argument is so high on the taxpayer that you want to make sure that you're always putting your best foot forward. You're making your best application possible. So anyway, that is a good framework of that outline that we discussed here in this video, so that you know what to expect and you know what is required to be successful in applying and when applying for a withdrawal of a tax lien. Federal tax lien, again, is on that form 12277. State tax lien withdrawal, every state has its own different system. Some have forms, some have some other completely different process. Obviously, 50 states plus the territories, way too much to cover in this video. But again, now you have an understanding of what's required of you. All right? So again, I'm Anton. This is Real Talk with Tax Law Offices. Again, thank you for joining me with this video. I'd appreciate a like on the video. Also subscribe, hit that button so that you are notified immediately of the next release of the next video. Thank you so much for joining me, and we'll see you in the next video.